Buying a home is a significant financial milestone. A home loan is a secured loan from a bank or housing finance company that helps you finance the purchase, construction, or renovation of a residential property. The property itself acts as security until the loan is fully repaid, making home ownership more accessible. The benefits of a home loan. Home loans make achieving home ownership sooner possible, especially since home prices often exceed an individual's annual disposable income. You benefit from a long repayment period, often up to 30 years, which spreads the loan amount out and results in more affordable equated monthly installments, EMIs. Furthermore, home loan interest rates are typically lower than those for personal loans. Understanding tax benefits. A major advantage is the potential for tax savings, though this usually applies under the old tax regime. Home loan borrowers can claim deductions on their loan payments. Under Section 80C of the Income Tax Act, you can deduct up to Rs 1.95 lakh on principal repayments, including stamp duty and registration fee. Under Section 24B, you can claim a deduction of up to Rs 2 lakh on interest payments made in a financial year. Note that if you choose the new tax regime, you are generally not eligible to claim these tax deductions. Lenders look at several key factors to determine your eligibility. First, your credit score. A score of 750 or more, though 730 is often acceptable, shows responsible credit handling. Next, income stability. Salaried individuals typically need 2 years of work experience, self-employed, 3 years of business continuity. Third, your debt-to-income ratio. Your total EMIs should stay within 50 to 60% of your net monthly income. Finally, loan-to-value ratio. For loans up to Rs 30 lakh, you can borrow up to 90%, requiring a 10% down payment. Home loans offer 2 interest rate types. A fixed rate means your EMI stays the same, offering certainty. Ideal if rates are expected to rise. A floating rate changes with the market, usually starting lower, and is beneficial if you expect rates to fall. These floating rates are typically linked to an external benchmark like the RBI's repo rate, while older loans might still use MCLR. Key tool, the amortization schedule. The Home Loan Amortization Schedule is a vital document. It's a detailed table that breaks down each of your periodic EMI payments into the principal amount and the interest portion. This schedule reveals how your loan operates. In the initial years, a significant portion of your EMI goes toward paying the interest. As you continue repaying, the outstanding principal decreases, causing the interest component to also gradually decrease. In the final stage, a larger portion of your EMI is allocated to the principal, accelerating the loan payoff. Managing your loan, prepayment and balance transfer. Prepayment of foreclosure. This means paying off the loan, either partially or fully, before the scheduled tenure. Crucially, as per RBI guidelines, banks are not permitted to charge foreclosure charges or prepayment penalties on all floating-rate term loans sanctioned to individual borrowers. For fixed-rate loans, lenders may still levy a penalty, often 2% to 4%. Tip: because interest is highest in the early years, prepaying the loan then yields the maximum interest savings. Balance transfer, also known as home refinancing. This facility lets you switch your outstanding loan balance to a new lender, typically to secure a lower interest rate or more flexible terms. Starting your application to apply, you must furnish documents for proof of identity, like PAN card, Aadhaar card, proof of residence, utility bills, proof of income, salary slips, Form 16, or ITR for self-employed, and property-related documents. Use available online tools to simplify your process. A home loan eligibility calculator provides an instant assessment based on inputs like income, age, and desired tenure. You should also use an EMI calculator to find the optimal loan amount and tenure that fits your budget. Understanding these basic factors, eligibility, interest types, and the amortization schedule will help you navigate the home loan process confidently. If you have detailed questions, remember to consult a bank representative for personalized guidance based on your specific financial situation.